What's going on, people? We are back live. It's been a long 3 weeks that we haven't recorded anything because things are being busy here. Also, I have other business to take care of. So now we are back in the market. Um, Market basically, this is, well, let me go back one step. So the recording is for August 17th, the week of August 17th. We are closed yesterday on Friday, August 16th. I'm recording this. So just want to give you guys a heads up. Um, this is for the week of, let's go here, for the week of 19. Recording for week 19. We're going to talk about the market for next week. What's going to happen? Are we going to have more trade wars announcement, or do we have more downside basically from here, or do we basically snap back to upside again? So that's where we are right now. The market basically been flush from 3,029. That was the high. Let's say the 30-30, right? Remember that I mentioned on my other video. If you go back to previous and the other video, I mentioned that 30-30 was the top that I'm gonna take a look. So, and of course, we're making smaller body candle, and then we came out with the news of the more trade war and the tariff with additional 10%, yada yada. So, of course, the market sell off. We bounce back. There's uh, there's going to be a delay on the tariff. Trump basically mentioned they're going to delay all the way to December for Christmas. And then, of course, the market is going back and forth here and then just being choppy on this area. Now, where are we going from here? I mean, that would be $1 million questions, right? Everybody wants to know, where are we going from here? What do you think we should do? Do you think we're gonna see more sell-off? Everybody will be panicked. Am I gonna lose my 401k, become 401a? So anyway, just to make it long story short, this is, keep in mind, this is my opinion. It's not trading um, recommendation or any feature references. The profit is not for disclaimer for not for recommendation, not for trading recommendation, and I am not responsible for the trading. And this is just my take on the stock market. And as I mentioned, I'm a technical chart guy, so I look at the chart. That will tell me 10,000 footprint, basically what's going to happen next. But of course, it's not going to be 100%, but that's where I'm relying on. All right. So we have ES future on the screen. The low that we have from the pullback is 27.75. Now we basically close at 28.90 or 7. So that will be the close on Friday. So where do you think we should go from here? We do look at this basically as the technical. We basically close at the 50% from the low here. Well, somewhere around that area. 50% of FIP right there, you can tell. We probably have another push to the 618. I apologize. This one. Yeah, that's fine. So you get the idea. So 38.2, that if you reverse, that'll be a 618 somewhere the same thing. So I think we're gonna have that level that will bounce from there, or I can do it this way as well. This way. Right? So you guys want to do it precisely. So 50% right there, 618, which is the 20 MA. So I would say we do have another potential to go up all the way that 20 MA, and then plus we have this all 1, 2, 3, 4, 5 resistant right here at the level. That will be another level to watch if we do bounce this way. We just have to see day by day. We don't know what's going to happen, but if I expect a bounce, I'm going to see if I'm going to short on this level. Because this level will be the fifth time is going to be tested. Um, I'm just gonna see if it goes up and then fail. That's where the time to short, and the target will be back to this level, which is 28.13. If it go down, that will be 27.75. Now, if that level breach, then we do see the triple bottom here. This is will be the level that everybody will be watching because this is a breakout point as well. 27, 30, 33, okay, or 27, 30, 27, 35. That will be the range that you want to take a look, okay? Now, that level will be another level to watch again because if you go to the weekly chart, okay, that will be the level, as you can see right there, okay? There's a lot of volume in this area. Now, the next level, if it got reached down again, that will be the 2630, okay? Now, of course, that level got reached down again, then we're gonna see that 25, 25. Okay, I do not expect it will go down that fast unless, keep in mind, unless there's a tweet about our economy. Now we're talking about like the yield inversion, yield curve inversion, yada yada. So right now at this moment, keep in mind those yield inversion, it's a lagging indicator. So it's gonna be about 6 to 12 months further ahead for us to see if we do gonna have recession or not. But if this market basically gonna go down faster, you're gonna see it's gonna take in this level. Okay, 27.33. That's what I mentioned. And then it's gonna go down and then test the December low. Okay, that is my take. Okay, if it's gonna go down fast, it's gonna test the December low. Now, what happened if the December low get tested? Now we are basically taking the bear coming out from the cave. Because why? If we make this as the chart, let's draw this guys. It's gonna be perfect. If you see that, that is the level of the devil. You want to teach. Because why? That is similar as the death on the chart. Once this level gets taken out, this is it, guys. Now we're talking about this level. 1587. Well, it's not going to be a straight drop. Okay, there's no such physical drop right away in terms of the stock market. It has to be up, down, up, down, up, down, but it's making a lower low. Okay, you gotta have to think that way. Then we have once this level, this blue level taking out, okay, then you have to think about a bear market on the stock and also housing economy. Now we know that the whole thing is basically is changing the trend. Now you don't want to go long. You basically want to sell the rip. Any rip higher, you want to sell. Okay, you're following the trend. That's what you want to do. Okay, of course, if there's a break down and then go up again, then of course you're buying bull because that trend, the bull trend is still intact. This is coming from December 2009, I believe, or March 2009. Yes, it is March 2009, all the way until now. That is 19 years right now. More than almost, I'm sorry, not 19 years, 10 years. 10 years, 2009, 2019, 10 years, okay? More than 10 years, of course, from March to now is August as this recording. But if you want to look more, it's not going to go down right away, but I do expect sometime closer to the end of the year, you will see this is going to be tested again. Okay, it might be not this year, maybe next year, but that will be something to do. Okay, now I also see a lot of hedge funds start selling off their position on this bull market. Okay, so you have to pay attention. The big guys are start cashing out, but of course they're moving their money from the profit stock to another stock that basically is still undervalued. Okay, I'm gonna disclose what it is earlier later on in the recording, but let me finish up with this whole thing for now. Okay, now the same thing, that's an ES feature right there. ES basically represent SP 500. Nasdaq, this is the NQ, represent Nasdaq. So the same thing. Okay, looking at this, there's gonna be a trend line here. Everything looks the same. The chart looks the same. You just have to pay attention on this trend line, right? If it is taking out, then we are basically going to the bear market territory. Okay. Now the same thing, IWM. We're gonna take a look monthly as well. It's the same thing. Look at that. We do want to check this guy. Look at that line. I'm going to delete the fan. We don't need that anymore. This one as well. Okay. That will be the chart that you want to, or the trend line that you want to pay attention for the bear market. This is on the monthly. Remember, this is a monthly chart. Let's take a look. The semiconductor here. Same thing, the same look at chart right now is still bullish. It's still, the trend is still intact. Okay, as long that we don't have a crazy drop on the market because of the tweet or crazy, you know, somebody basically being childish, I guess. So anyway, I don't want to go into too much the politics. So let's go back. IBB. Let's see what else. Yeah, this is sideways. It looks still like a bullish. Look at the bullish bull flag, right? The trend is still intact. So just pay attention on this. We don't know what's going to happen. IBB looks pretty weak, I would say, because it's been from 2016. It never take any new high. 2016, yes. That's the high, and then after that, it's just sideways. It's making a high low. So we'll see. All right. Now let's look at go back again what we talked. ES. Let's go to daily chart. Keep in mind, if Monday we have an upside, then 20 MA will be the spot that I would say a resistance right here. If we're going down, we have to take a look. If we're taking out this level, which is the 28.35 level, then it's gonna go down and test that up, 27.75. Okay. Now let's take a look at the oil. I like to take a look at oil. Oil was making a high low. It did not making a high high. So something that we need to pay attention. Oil is already showing a little bit weak. Let's take a look on the weekly and monthly. Yeah, if you look at that, so we are basically right here. I mean, we're still okay. We're making a sideways. So nothing really have to. Which is I hate this level, you know, because it's sideways. You don't know what's happened with the balance. Eventually, will break out either to one that is on the side, right? Either going up or going down. So balance is always the toughest range that I do not want to be involved with, because what happens is you don't know which direction is gonna go. I prefer to do it on the edges. You know, hey, if it's gonna go up, let's go up. You know, let's buy the breakout. If it's gonna go down, let's buy the breakdown. That will be easier for trading that way. And you do have a small risk to manage that way. Now I do want to take a look at a couple things. The Tesla. I haven't really get into Tesla for a while here since the last ER. This is something that I want to see. Let's take a look on 23rd. Okay. Oh, this is PFE, so I'll take a look at that as well. Tesla now is 219 or 220. So let's take a look for next week. We do have about $11 move, either upside or downside. So if we're looking at somewhere in the 205 with 200, that will give us about 205 to sell 205, and then sell buy the 200 on the bottom. That will give us about 48 cents credit. So time 10 will be about 480. This is something that I'm looking for. I mean, it's 500 bucks every week, so that's a good thing. Um, let's take a look at the charts first, right? Now we already broke the upper channel here, the trend line of the uptrend. Now we're basically sideways. I mean, we're making high and low. So I mean, I do expect that Tesla probably will keep going down and test maybe this level right here. This, if you can see the downtrend line here. When is the last time we touched this? We go down, we go up, we broke out. So we never really touched that, right? So there's a possibility that we're still going down and touch that, which is 191, yeah, 189, 190. So that is a possibility. Yeah, so the trade for next week, a 20, 205, 200, I don't think that is a good trade, especially if it go down right away, right? It can see, it can test that, and after that it will go bounce again. Um, I would probably want to push my Tesla trade all the way to the end of the month. Let's say if I'm selling 190 and then buying 185, that's only giving me another 20. It's only 25 cents, which is not a good trade. And then the expected move is about $16. So remember, $16 is basically for the whole week. But if one day it can move 10 or 5, it can move 25 pretty quick. So I don't wanna be in that spot, that I have to kind of roll out my position. But I do like this, especially if it tests the backside, then it does have the probability, the bigger probability will bounce from there. So 190, that will be something. Let's say next week, if it pull back and then it's giving me about 50 cents, then I will take it. I will take the trade all the way to, let me see. See, the expected move ATR will be around 25 bucks, right? So that's why 220 with 190, that's about $20. I'm sorry, that's about $30. So that will give me enough cushion so my spread doesn't get killed basically. All right, so that's Tesla. At least that will give me a little bit better look at what I'm trying to do. Let's take a look monthly here to see if there's other support. Yeah, see the support back in the day was 180, 180. So 190 is a good one. If that breach basically is going to test another 180 here, and then it's going to go down to 120. But I'm not going to predict it far away. Just take it one level at a time. So let's take a look at another one, which is the semiconductor. I like AMD. AMD it's holding up very well with the trade war, um, and then plus with the new AMD processor that was released. That was really good. There's a lot of hype there, but of course there's some downside here as well. But it bounced back really quick. Um, I have to see that level. If it does break, which is it does, and then it pull back again, I'm going to take a look on the, yeah. This is the level that you want to pay attention to, 35, 34. If it does break 35, take a look at, and then 38 will be another resistance right here, which is 30. I'm sorry, 42. Yeah, 42. Pretty good. And look at that, it's super good. I mean, it's the squeeze looks great on AMD. Weekly, it looks okay. Daily, let's take a look daily. I think daily looks good as well. See, yeah, it does have room basically to go up. One thing that I want to take a look is CrowdStrike. I really like this. Since IPO has been going up double from 56, it was out like 40 something, and then opened it at 60 something. Now it's like 100. So 100 was a 52 weeks high. This CrowdStrike or any security, cybersecurity company, they are doing very well in the next couple of years because a lot of company that move into the cloud, they will need this, and this company will basically complement and protect the security of the company. The other thing is also cyber, CYBR. It pulled back a little bit, but it does look at that simple rally. Um, it's just doing very good. So I like this. Let's say Fortinet, I think that FTMT is good as well, sideways. I think Palo Alto, it was a little bit sell-off. I think there's an earning on this one. Let me see. Or somebody basically left the company. I think there's a change of the, yeah, right here. The top sales executive is signing the share slumping. I mean, just a top executive, unless he's bringing like, 50% of the sales, then yeah, it is affecting. Cisco, let's take a look. Cisco, I mean, the earning pullback is a good opportunity. Look at that. It's almost go to the support level. I'm gonna start looking at buying this. Oh, look at that. Yeah. Maybe next week I'm gonna start buying Cisco here. Um, that level right there, you need to stay, right? If it does stay, then we do have the potential to bounce up to 40. I'm sorry, 50. Yeah. And then the next level is 50, yeah, 51. 51 will be, I would say 50. 50, I would sell in 50. So, so 47 to 53 points. So that's a good bounce. I'll take a look this next week. I do have a position on this company. This is the 47 ink. I purchased this at 9 and then 8 and then also 6. So this is for long term. The reason I purchased this company has a good portfolio for cancer, I believe. Um, so, and then plus there's a cut 20 target, so I'm okay. And then there's also a big um, hedge fund also purchased this one. So this is for long term. WW Weight Watcher. I did purchase this on earning play. I bought it at 7 something for the option call, strike 20 on January 2021. The stock basically went up to $30. I sold it here. That made total profit with Weight Watchers so far that I've been playing is about 2,500. I sold it. This is gonna go back to this level to around at 25, 27, and then maybe to the gap fill if eventually there's a drop. Then I would like to purchase again. Weight Watcher has been making money for me, and I love it because hey, who doesn't want to be at in the bikinis? Everybody wants to be pretty. So that's Weight Watcher. Let's talk about EA. I do have position on EA. Esport will be one of the industry that I think will be solid for a couple of years. I do expect EA will go up to 140 eventually. We'll go back to this level. They do releasing a lot of new games for next year as well. I do have a position back here, which is 103. It is against me right now, but I'm hedging them. So I've been collecting weekly premium here. As long as the market or EA basically been sideways. So I'm basically collecting premium until this bad boy basically start bouncing back again to 100. That will be my level to sell. I do not want to hold. Um, well, I have it in option, which is Gen 2020. So I have about 4 months, I would say. So 4 months is good enough for me to play this bounce and this sideways to collect premium. Okay. I do like ADVI as well, which is the Blizzard company that make WoW game and also a lot of other stuff. And especially there's a new competition in LA. I think they're playing. Shoot, I forgot what's the game. Anyway, you guys know if you're a gamer in LA. So they are playing a competition on that right now. ATVI Blizzard, I think, is gonna also go back to 55. That will be my next target, and then 60. That will be the level that you wanna sell as well. If you want to hold it for long term, that's a good thing as well. But I like to take profit when I see a resistance and then just reevaluate from there. Take Two, this is a Take Two interactive software, which is the gaming industry as well. It's almost making go back to the 52 weeks high, 139, 140. That would be something that's close enough, about 13 points. So I do expect this will pull back and then go up again pretty quick, and that will bring EA and ATVI up with them. Look at that, the monthly squeeze is coming. So this is a great company to have in your portfolio. Remember, esport will be very, very good in the next 5 to 10 years. Okay, a lot of people, a lot of gamers, a lot of YouTuber, a lot of Twitcher, they like to be in this industry because they are doing so much well and they're earning money just playing games. Okay, that's something that you need to pay attention. It will be um, another gig or another, I would say, another sport that basically people like to jump in because you're playing game and then you're competing with each other and then you can win some money. Let me silence this one. So that's basically my take on the esport. Let's take a look at the other stuff. We look at Facebook. It's okay. I mean, it's pulling back a little bit. Let's do change it to daily, so you can see it's sideways right now. Apple. Mr. Apple. There's no more Steve Jobs, so it's kind of sad. The innovation is kind of dying, especially John Ive is leaving, so already left. I don't know. It seems like Apple, yeah, they do have a lot of cash, but about the innovation, right? That's what I like to see in terms of the company. You know, you can have a lot of money, but you survive competing against other tech company that always innovate, always trying something new. I mean, yeah, they do have a lot of money. Probably they will buy them pretty quick, so and then merge into the Apple company, Apple family. So that's always a possibility. But yeah, I mean, it's sideways. I don't know. I don't feel like playing a lot on Apple. I can sell a credit premium here at 190. That'll be another thing to look at besides Tesla because the Apple um, premium is pretty good as well. But of course, the stock can move pretty quick. So 190, yeah, we don't have enough juice. 27 cents. Let's say on the 30, 60 cent with 185. Wow, it's been a long day for me. So, sorry about the yawning here. 23 cents. Yeah, not so much. I don't want to go down to go up to 200 because that is super, super close. 16 point play, $7 and $9. So we're looking at 195 maybe. If I go to 195, maybe that will give me more juice. 50 cents. Yeah, 50 cents. So that will be a consideration. But Apple is one of the company that impacted a lot with trade war. So I'm just afraid they're gonna say something or some tweet coming out. Yeah, another trade war things, and then Apple will go down. And I said, the last one that we had from 10% would be 220, 220, all the way to 190. The 20 points drop. Oh, 30 points drop. Crazy. That is crazy. See, that's the thing that I don't like about, some looking at some stuff that is very, very vulnerable with the tweet and politics. But hey, maybe things will calm down because the tweet that we have here is just basically, yeah, we're gonna delay the tariff all the way to December. So hopefully that will cooling down a lot of stuff. But anyway, so that's all my take. I hope you guys making a good money for next week. I'll lay down all the play that basically I'm interested to look at. So hopefully you guys will follow me, subscribe to the channel, and then hit the likes button, put a thumbs up, and I'll see you guys next week. Ciao.